Hello everyone and welcome to a new video. It's been a while. Junior mining companies that have barely moved this year compared to a lot of companies, and these have tremendous opportunity. Obviously, in my opinion, you can read that as not financial advice. There's one gold company that Rob McEwen and Rick Rule is invested in, so let's go right into it. Starting with the first one, it's Emperor Metals Corp. Why is this of interest? The fact that this company having strategic investors such as Rob McEwen at 7.2%. By the way, he is also invested in Borealis Mining Company, which is a very interesting company in Nevada, and also a recent investment made by Rick Rule. And the company has 1.4 million ounces of gold inferred at 1.7 grams per ton. And the fact that they have two projects, they have Duquesne West Gold Project, which is the one with 1.4 million ounces of gold in inferred, and where they also have another project called La Pelletier. This is in Canada, by the way. And the fact that apparently the La Pelletier has 90,000 ounces gold measured and indicated at 4 grams per ton, apparently inferred at 137,000. And apparently they could perhaps allegedly produce at that Lac Pelletier at the end of 2027. Beginning of 2028, allegedly, since they have some infrastructure and so forth, that they would... Apparently they've drilled 105,000 meters of drilling, and apparently they have 3.3 kilometers of underground development in place, including a portal, a vent race. They're very close to infrastructure, and the fact that their CEO, as you can see on there, according to the website, he has worked for majors such as BHP, Barrick, Teck, Kirkland Gold, Agnico Eagle. So most of the people in the management seems to be experienced with gold or like in mining sector. Co-founder has 35 years of experience in global mining sector, and he's raised over 1 billion Canadian dollars. And the independent director, Ian Harris, also has 25 years of experience in global mining sector. So these companies seem very interesting, and also this company, as mentioned, 39% of the shares are owned by high net worth individuals and 5% by management and 7.2% owned by McEwen. This company has some infrastructure like railways and power lines and water apparently, and they also have government maintained road access to the property, low cost energy solutions like hydroelectric, which is fantastic. The fact that they have some resources in place already, and the fact that they're also using AI to increase the efficiency of like analyzing the data, find more grades apparently. They are successfully implementing machine learning for their main project, like a comprehensive 3D model for the deposit to apparently improve the overall visuals and grade apparently. Let's go to the next one. Now we're going to talk about what I think is the most hated silver stock right now. It's Cerro De Pasco Resources, which is a company that has tremendous upside potential, in my opinion. The fact that the company has 423 million silver equivalent ounces, and the fact that they wouldn't even be mining it, they will be processing it apparently, because most of the resource is in like a stockpile from from previous mines throughout like the centuries mined, and apparently since mining weren't as sufficient a couple of decades ago, there's still a lot of resource in the stockpiles. Calculating or like using samples from the project, apparently those stockpiles apparently contain 423 million ounces of silver, and the fact that they wouldn't need to mine it, they could just process it apparently. Reprocessed tailings would enable resource recovery and wouldn't be that damaging to the environment, and apparently the grade is 5.5 ounces of silver equivalent, which is very nice. And the fact that the company's barely moved, it really moved at the beginning of the year and to summer, and then it's basically stayed stagnant. Whilst every other silver company has just gone up to the sky these last couple of months, this company has barely moved. And the fact that they have a tremendous resource, and apparently it's not too far away from production. And apparently, since they aren't mining, they would save 40% of the typical operational cost. And apparently they would also have some gallium. By the way, also 20-year processing life, because it's not mining, where apparently the extraction per ton would be between $1 and $2, and open pit would apparently be $2 to $15, and underground would be $30 to $200 according to the website. So they would have lower fuel and equipment costs than their peers or like mining companies. They would have a low infrastructure cost compared to others. The fact that about 30% of the value is like in zinc, 19% in copper, 27% in silver, 12% gold, and some lead. And obviously, apparently this is like a little bit older, but obviously there's gallium included, and this is in South America. And the fact that they also have some gallium. And why is that of interest? Apparently China is producing over 90% of the gallium, quote according to the website. And gallium is increasingly used in like semiconductors and high tech and so forth, like in 5G semiconductors, LED lighting, and solar panels. Solar panels are very useful in like where there's sun. But it seems very interesting in the fact that they would apparently have a 53 grams per ton of gallium. They would have 0.10 grams per ton of gold, 0.09% copper. They would have lead, and they would have zinc, and silver would be at 1.6 ounces per ton. This company seems very interesting, and by the way, it's not currently producing, and it's obviously higher risk. But since they have gallium, and the fact that America needs to be more independent from China, then this company would offer some gallium, obviously. And the fact that this company has Eric Sprott invested, and by the way, Eric Sprott apparently owns 16% of the company. Management and directors own 12% of the company, but it has tremendous upside potential. I really like it. It's one of my favorite silver companies. So now let's go over to the next one. It's Cartier Resources. Why is this of interest? The fact that Agnico Eagle is invested in the company at 27% of the shares, which is insane. And apparently 21% is owned by European investors. Apparently, in indicated, this company has 720,000 ounces of gold, and in inferred they have 1.63 million ounces of gold. Apparently, they would have a 10-year mine life at 117,000 ounces of gold at almost 5% gold per ton. But it has high grade, and by the way, this is in Quebec. And the fact that apparently between 2025 and 2027 they would have a preliminary economic assessment update, mineral resource estimate update, and environmental baseline studies, and drill even more or even larger resource. They have very high grade gold apparently. Like if you were to look at the website, they have several drill samples that are amazing. Like one called East Nordo has 130 grams of gold per ton at 1.4 meters. But they have very high grade gold from the drill samples, and obviously this is not producing, by the way. But it seems very interesting, and the fact that Agnico Eagle, the second largest gold producer, they own 27% of the company. It seems very interesting. But let's go over to the next. We're going to talk about Lithium Americas, which is a company in America where they have a major lithium deposit, and the fact that this company rallied tremendously this year and then it had a massive correction. It seems very interesting though. And the fact that this is in Nevada and they would have an 85-year mine life. So this is a tier 1 deposit. So they are constructing now between 2025 and 2027 initial production by like end of 2027, which is not that far away. And the fact that the CEO of the company previously ran FMC's lithium operations, then Arcadium, now Rio Tinto, for 5 years apparently. And apparently company obviously with lithium being more needed due to in batteries and like so forth. But apparently phase 1 would have a 40,000 ton of like battery grade lithium carbonate, which would apparently 5x US capacity. And apparently they have a 20-year a contract with General Motors and offtake. And it seems very interesting. Obviously it's had a little correction, and the fact that they would be producing at one of the largest lithium deposits on the planet in 2 years, and it would be US exclusive, and they have partners with the GM, and obviously the government of the United States had a stake in the company, as was popular in news a couple of months ago. And apparently this company seems to have been forgotten a little bit after the correction. And with the increasing need of data centers and with needing battery storage to make batteries, you need lithium, at least for most batteries. And it seems to be a very interesting company. And the final company on this list is Critical Metals Corp. This company is one of the largest rare earth deposits, which apparently has a 30-year exploration license. And obviously they also have a lithium mine in Austria, which apparently would target production by 2027-2028. Oh, hey, rare earth and lithium. And the fact that they would have, and since China is very influential in mining and separating, obviously this is mining, this is not separating. Obviously this company, if I remember correctly, is working with Corp, which is a major up-and-coming rare earth separation company. China is very dominant in rare earth separation. I think, if I remember at the top of my mind, China has between 60 and 70% of like mining the rare earth, but like the separation of the rare earth is apparently even more important, and they have like between 80 and 90% of the market stake there. And apparently this company would between 2025 and 2026 commence development at the Tanzberg, which is in the rare earth, and start construction of pilot plant and get some more infrastructure and secure more financing with partners. That's between December 2025 and 2026, which is very interesting. And the fact that apparently, just to mention, one F-35 fighter jet requires 920 pounds of rare earth. Several different ones, but like combined, according to the website. And with a destroyer called DDG-51 Agus needs 5,200 pounds of rare earths, and the Virginia class submarine needs 9,200 pounds of REE, or like rare earths. The fact that China is very dominant in one of the most critical industries to be able to make military equipment, and America is apparently interested in keeping its hegemony, then apparently these companies that are obviously in the sectors that are required to product or like to be able to produce the fancy equipment, the fact that this company rallied tremendously and then it had a massive correction, and it still seems very interesting. The fact that this company would have 180% IRR in less than 3-year payback time, and the fact that they have one of the largest resources on the planet, and apparently they would be near hydro plant for like electricity, but that they would have the right to get up to 92.5%, would produce 75,000 tons of REE. Compare that to Mountain Pass, which is the MPE, which produces 43,000. And apparently the initial capex would be 290 million. Deposit would have cerium, lanthanum at 18%, and cerium would be 35%, and yttrium would be 16%, and neodymium would be 13%. So a lot of these rare earth companies have had a tremendous correction after the massive rally in October. So they seem very interesting though for those with long time preference. But they aren't as cheap as when we talked about it during the summer. So I hope you thoroughly enjoyed this. This is not financial advice. These are companies we have mentioned this year, or like a lot cheaper when we mentioned it during the summer. But the fact that they've had a massive correction, especially like this one, I hope you thoroughly enjoyed it. Have a wonderful new year. Peace.